Tesla reported first quarter earnings in the afternoon of April 26, but the stock price continued to drop. Tesla investors, especially the retail investors, will be wondering what happened to Tesla. There are many questions the retail investors would like to understand, such as, where is the bottom might be, when the stock price can pull back, how long do you need to wait to see the green again, what will happen to Tesla next? Could this be due to the recent car crash incidents? The recent news from Yahoo Finance that Tesla has allegedly already completely sold out its production capacity for the second quarter. Isn't this good news to the stock? But why has the stock price still not bounced back to its all-time high of $891.38 on Jan 26? Well, let's look into the challenges Tesla faced and understand the reasons that caused the stock price to fall. After that, we will look into the positive factors that could benefit the stock in future. If you are new to this channel, welcome. We are making videos to analyze companies, cryptocurrencies, and provide information to help you understand what to invest. Please like this video to help the YouTube algorithm to increase this video's search ratio, and don't forget to subscribe to the channel. Without delay further, let's get started. Fundamentally, there are factors that cause the recent stock price volatile of Tesla. We can break them down into two major categories: the market sentiment and Tesla challenges. The market sentiments are driven by the recent news reported in April. 2 died in a Tesla car crash in Texas with no one in the driver's seat and burst into flames. This has raised the concern on misused Tesla autopilot driving features. A month later, on 7 May, another Tesla car crash reported in Guangdong sparked a new round of safety concerns. At the beginning of April, news reported that Chinese military bans Tesla cars in its complexes over camera concerns. As the China market remains an important market of Tesla delivery growth, this cannot be overlooked. The China market accounts for 30% of Tesla's total revenues. Tesla came under increased pressure in China from regulators and state media after the protest by a disgruntled customer at the Shanghai Auto Show went viral and forced the electric car maker into a rare apology. The worsening of Tesla's public image as customer complaints increasingly hurt the brand image in the Chinese market. Another factor that drove the market sentiments was the bounce back of 10-year Treasury bond yield to 1.65% on 30 April before it fell back to 1.58% on 7 May. As Tesla is a high-growth stock, hence the raise of bond yield will directly hurt the stock price. Fed Chairman Jerome Powell mentioned on 6 April that the increases in inflation might be coming to the U.S. as the economy reopens. Beside facing the negative market sentiments, Tesla also faced challenges and questions by the investors and analysts, which resulted in the stock performing weaker than it was expected. As of the first quarter of 2021, Tesla's carbon credit sales comprised about 6% of the automotive sales revenue on a quarterly basis. On a yearly basis, Tesla's carbon credits revenue also made up the same 6% of the automotive revenue in 2020. However, recently one of Tesla's biggest customers, Stellantis, the combination of Fiat Chrysler and Peugeot, has announced that it plans to stop buying Tesla European emission credits in 2021. Losing income, even if it is not related to its automotive sales, will still have a significant impact on its stock price. Competition is heating up in Tesla's home market, the United States. Ford Motors' electric sport utility vehicle, the Mustang Mach-E, has begun eating into Tesla's market share. Volkswagen has introduced an electric SUV, the ID.4, in March. As Ford Motor and Volkswagen are still new into the EV market in the US. Hence, they are still eligible for federal tax credits. However, Tesla cars are no longer eligible for the tax credits. Hence, in price comparison, Tesla's Model Y becomes more expensive. In China, Tesla faces a host of homegrown rivals that have been ramping up in order to compete head-to-head with Tesla. Local startups such as NIO, XPeng, Li Auto, BYD and other companies are gaining popularity and ramping up their productions. NIO and XPeng have both sought to claim the role of domestic champion against Tesla. NIO unveiled its first sedan in direct competition with Tesla's most popular Model 3 and other international competitors. Huawei has partnered with Beijing-based EV maker Beike Blue Valley with an eye toward taking the lead in Chinese EVs and technology. Homegrown competitors are not the only thing Tesla has faced in the China market. International automakers are eyeing to grow their portfolios of EV in the China market. General Motors worked with a Chinese partner to launch the Wuling Hongguang Mini EV in July 2020. The compact budget EV has been selling so well that it has begun to threaten the Model 3 for the title of most popular EV model. Tesla needs the Chinese market desperately in order to maintain its growth. With competition getting hotter, Tesla faces an uphill battle in China to establish the necessary long-term market share already baked into its $644 billion market capitalization. Tesla's extreme vulnerability to Chinese government interference, as well as its potential to be used as a political weapon in an escalating Sino-American confrontation, leave it exposed to a multitude of exogenous pressures. The Biden administration has taken a firm stance in its negotiations with China. Tesla could find itself made a victim of a political game. A global semiconductor shortage has been rippling through the auto industry, which needs chips for infotainment systems, engine management for better fuel economy, and power braking and steering. Tesla, the Chinese electric vehicle maker NIO, have been halting production because of the chip shortage. Tesla halted production at its Fremont, California, plant in February for 2 days due to parts shortages. The global chip shortage appeared to be affecting TSLA as Samsung Electronics in February said it has paused production at a factory in Austin, Texas. We are still seeing Tesla productions did not slow down and reported delivery higher than expected. However, if the global chip supply shortage did not improve in the third quarter of 2021, like other EV makers, Tesla will not be spared. Global EV makers are becoming more concerned over future supply shortages of key materials needed for electric vehicle batteries as spending on new production soars. The price of battery raw materials began to rally sharply in December 2020. Prices for lithium carbonate at the factory gate jumped by just under 13%, while X-Works cobalt sulfate and nickel sulfate increased by 3.2% and 6.4% respectively. In March 2021, Tesla CEO, Elon Musk said the launch of Tesla Semi, the fully electric semi-trailer, is being delayed again due to battery cell constraints but may go ahead in 2022. Tesla's electric semi-trailer requires high energy which demands 5 times of Tesla's electric cars. Tesla has prioritized by giving its batteries for EV production to prevent production output drop that could hurt its revenue. Tesla is facing a number of factors resulting in its stock underperforming. So how could it overcome all these challenges and gradually improve its stock price performance? Despite the one after another negative news on Tesla cars, the popularity of Tesla cars still remains strong in most of the markets. This is because Tesla is the pioneer of EV car maker. Furthermore, the Elon Musk effect has continued making the brand stronger. Investors are concerned about Tesla losing the biggest customer on sales of regulatory credits. However, this should not be a concern by Tesla investors as Wall Street analysts have always modeled credit sales as a declining source of future revenue. It could be coming earlier than it was expected, but this is also a good time for Tesla to prove that it can sustain on its EV sales to generate profits for its operations. As long as Tesla's delivery is still beating the expectation and introducing new models, a new revenue source will be created. Competition is one of the issues that should concern Tesla. However, Tesla has long prepared for the tough competition day to come. Tesla's strategy is to be the most innovative EV car maker. The launch of Cybertruck is about getting attention and proving that Tesla is one of the world's most innovative companies. Tesla's CEO, Elon Musk, is a master of building and using innovation capital to win support for his ideas. Tesla has also begun building vehicle and battery manufacturing factories near Berlin, Germany, and Austin, Texas. This is to ramp up global production to ensure quick enough to capture the market shares in markets beside the US and China. Most of the world has been struggling with the semiconductor chip shortage. In addition to the chip shortage, supply chain issues have made it hard for companies, especially EV makers, to keep up with production. However, as per Tesla, they are able to navigate through global chip supply shortage issues in part by pivoting extremely quickly to new microcontrollers, while simultaneously developing firmware for new chips made by new suppliers. Tesla decided to develop new technology so that the chip that everyone else needed was no longer necessary. By being able to update software over the air, drivers were not impacted as heavily. This is a pretty good innovative way to resolve the chip shortage issue. Tesla has its own factory to build lithium-ion batteries for its cars. However, the global shortages of nickel, copper and other electric vehicle battery minerals may not be able to be resolved by having its own battery factory. As a highly innovative company, we are betting Tesla to come up with a new technology to resolve future battery supply issues. After all, the battery supply shortage will not be just faced by Tesla, all its competitors will be facing the same issue when ramping up productions. This is a racing game. Who in the EV industry is able to create a new technology to resolve the supply issue will be the ultimate winner. Comparing all the EV companies, Tesla is the only company that stands a higher chance to introduce a breakthrough innovation. Hence, as a Tesla investor, we are still bullish on Tesla's future. For sure, Tesla stock will be a long-term and high-return investment. This is not financial advice. The content of this video is intended to be used for informational purposes only. It is very important to do your own analysis before making any investment. Thank you for watching. If you like this video, please give a thumbs up, else, please leave us comments to help us improve our videos. Don't forget to subscribe.